For example, probably when you start thinking about, let's say, the recognition as to when revenue has to be recognized, you're going to find that there are some very important changes. For example, if you work with distributors and resellers, then there is the issue of the difference in timing of revenue recognition with respect to where today you're waiting until the distributor tells you how many final sales or sales to the end user they had. Under most circumstances, you'll have to estimate under the new standard. For that estimation, you need a significant amount of evidence, you need documentation, and potentially changes to your systems if you don't already have something fairly robust. But the main question is whether you've got the data that you need. And then how are you going to do the estimates? And the accounting for variable consideration is not, it's different. It's not straightforward. It can be difficult. When you get into measurement, there are many changes that come in addition to the estimation of variable consideration. There are changes with respect to financing. We've never accounted for a receipt of cash from the customer significantly in advance of when we provide goods or services. But now we have to do that. If you go further down the line, there's, of course, with respect to recognition and measurement, there are issues with cost capitalization, both the incremental cost and the fulfillment costs. Some companies do have experience with incremental costs, but very few have any experience with capitalizing fulfillment costs. You may never have tracked those fulfillment costs in the same way that you're going to need 606. But then you come, after you've done the recognition and measurement, you get to the third leg of this whole thing, which is disclosure. And there are significant changes with respect to disclosure. One of the disclosure requirements that most people are having really difficult times with is that of the backlog disclosure. And part of the problem is that some, and I think somebody alluded to this earlier, manufacturing companies do provide backlog disclosure today, as is required by the SEC. But the definition of backlog and the definition actually of firm contracts in the SEC requirements is extremely vague. And you certainly can't compare it. 606, on the other hand, does require something that many people are calling backlog disclosure, which I don't think it is. But in any case, the point is that it only applies to valid existing contracts. You can't apply it for, or you can't come up with it from the firm contract. So in that sense, there's a substantive difference. There's an enormous demand on data. And I think the disclosure requirements, particularly this so-called backlog disclosure, is one of the most difficult challenges. Another speaker had alluded to the issue of full retrospective versus modified retrospective. I think that's where the challenge is for your FP&A team. Because if you do pick the modified retrospective, which there might be good reasons for, the problem with modified retrospective is that it's not going to give you the type of data that you need for comparative purposes, for prediction, for forecasting. And that makes it very difficult. And then Shauna had earlier referred to internal controls. Well, that's a fundamental component of financial reporting. That's another area where you'll have to be very careful, because if you're changing recognition, measurement, and disclosure, then you also have to think about how the controls have to change for that.